Hello there, my friends. Chris Marcus here with you for the StockPulse Market Brief on Wednesday, September 26th. As I mentioned yesterday, the big news of today was the Fed meeting where, as expected, the Federal Reserve did raise the Fed funds target rate by 1/4 of a point, which we will dig into. Although a quick check on the market levels: Dow Jones at 26,385, S&P at 2905, NASDAQ back below 8,000 at 7,990. In Europe, we see the DAX at 12,385. Asian markets, the Nikkei at 24,033 and the Shanghai at 2806. Oil down a little bit today. A bunch of things were down following the Fed news. But yeah, oil only down 1/4 and settling at 72.04. Quick look at the cryptos, which amazingly enough, you actually see a little bit of green there today. Bitcoin clocking in at 65.21, Litecoin at 58.81. Volatility in Ripple continues back up 15% today. And certainly in many circles known as the bankster's coin because is a lot of bank involvement in that one. So interesting to keep an eye on. I don't personally trade that one myself. I steer clear, but certainly a lot of volatile in Ripple, which again is XRP. Over to the bond market. Interestingly, as the Fed raises rates, finally the 10-year yield comes in a little bit. Looks like it was as high as 309 today and came in quite a bit, down to 3.05%. And over in the precious metals markets, as you can see, gold at 11.95, silver at 14.37. So not really a big move out of the metals today. And with that said, let's get to the highlight. Again, it was the Fed hiking interest rates, raising its economic outlook and dropping the accommodative language, which translated into English and non-Fed speak means that basically they did raise the rate. They say the economy is better than perhaps the last time they spoke on it. Dropping the accommodative language means essentially not saying that we're going to be standing by ready to come by with more easing if necessary. And I'm a little bit skeptical if that will actually play out like that, because certainly as these rates continue to go up, and keep in mind that they did signal, I believe, that they will be hiking again in December. So the more these rates go up, the more pressure that puts on the markets. Certainly most evident so far in the real estate market. And should rates continue to rise even remotely substantially, whether by the Fed's interest rate policy, or if at some point the market just walks away from the bond market in an even stronger degree. We've seen that happen. Russia selling their treasuries, a bunch of other countries at least becoming net sellers, all putting pressure on all these markets as rates go up, similar to what we saw happen back in 2007 and 2008. And let's see, digging into the commentary, Fed's Powell says he doesn't see inflation surprising to the upside, which I found a little bit unusual. It's not in his forecast, although here's U.S. inflation accelerates to 6-year high, eroding wages. That was back in June when the consumer price index checked in at 2.8%. Again, that's, in my opinion, not the most accurate inflation statistics. See John Williams' shadow stats if you want to dig into that one more. Yet, even that number above the Fed's supposed 2% mandate. So, but apparently Powell is not seeing any signs of inflation. So I'll respectfully disagree there, and I guess we'll see how it plays out. But one thing that was interesting that I more likely would agree with him, Powell says Fed is hearing a rising chorus of concerns from companies about Trump's trade tariffs. I would not be surprised at all if that's the case. I've talked before about how the tariffs in the end make things more expensive for the people buying stuff. I'm sure it is not making things easy for the companies either, and for our economy in general, which is why, well, on one hand, leaving interest rates at 0% inevitably has its own set of risks. To hear Powell say that economy looks great and he does not see any signs of inflation, seemingly overlooks the impact of the trade war, the impact that the rising rates will have on the market, which again is why we focus so much on commodities and resources here on Stock Pulse. And lastly, as always, this video is sponsored by Miles Franklin. Should you be interested in buying precious metals, that's the place I'd recommend to go. It's milesfranklin.com, and the phone number 1-800-822-8080. So with that said, we'll wrap up today's market brief. Again, Fed hikes a quarter point. Interest rates will continue to go up, at least for the foreseeable future. And it'll be fascinating to see how the markets respond. So with that said, thanks as always for watching, and I'll see you again tomorrow.